Yes, people, welcome back to the channel, guys. We're back again, and we're back again with another stock market recap. And today, guys, we're gonna be giving our thoughts and opinion, and we're gonna be looking at the Federal Reserve, Jay Powell, and FOMC meeting, interest rate decision, all of that stuff, and how the market reacted to what the Federal Reserve did today, which was a huge move in the market. And this explained to us a lot of things that we need to know and the direction that we need to take in the market and how we should approach the market and what we should do coming into the future. And we're going to be looking at some stocks. We're going to be looking at news, and we're going to be looking at data as well. And we're going to be going over the interest rate and what some of the stuff that the FOMC statement showed to us, and some stuff that has came out from the Federal Reserve. And yes, people, before we get into it, hope you smash the like up, hope you subscribe to the channel, and let's get right into it. So first, we're gonna kick it off. We're gonna jump into the news. Let's get into the news before we get into the charts or any of that stuff. Let's get into the news. Hope everyone is good out there. Hope everyone is fine. So boom, looking at the latest news. Stock market today. Dow soars as Powell shoots down aggressive Fed rate hike. So everyone thought that Jay Powell was going to drop this huge bomb on us, and he was going to do a rug pull, right? So boom, that did not happen today. So Federal Jay Powell, he basically said that, hey, listen, guys, we're not going to rush to go too hawkish. We're just going to chill out a little bit, and we're going to slowly tighten at a specific pace, and we're going to continue to monitor and watch the market, and we just work our way along as we go, because we're already behind the curve. Let's be real. But he's not going to come out and say that, but it is what it is. So Fed delivers biggest rate hikes in more than 2 decades to crush red hot inflation. And Bank of England set for fourth straight rate hikes to fight inflation. Everybody is trying to kill inflation. Mexico to boost output of staple foods in plan to curb it. Everybody is trying to kill inflation right now. And we're going to see how all of these news impacted the market today. We're just running through a few of these news. Shell earnings, Shopify outlook, beer earnings, 3 things to watch. eBay depends, e-commerce gloom with disappointing forecasts. eBay is getting hit. 2022 global workforce trends. Etsy say impact on sales from seller strike not material. All right, so boom. Let's hop into this article right here. Investing.com by Yasin Abraham. So we're gonna hop right into that, and we're gonna chop it up, and we're gonna dissect that, and we're gonna see what Mr. Abraham is reporting, what the Federal. Let's just see his breakdown of the Federal Reserve and what he thinks, and some information he got to share with us. I don't know why the stream is running so slow. All right, boom. Jay Powell. All right, the Dow rallied Wednesday as Federal Reserve lifted interest rates for the second time this year. But Chairman Powell cooled fears of more aggressive rate hikes. That's one of the big 3 main factors that had an impact on the market today. He cooled the fears of inflation. He cooled the fears of more aggressive interest rate. He also stated that things in China could definitely affect us in the US. And he also stated that the balance sheet, he's gonna run that off all the way down in I think it's July or June. I think it's July. I think it's July. He's gonna run it down in July, somewhere down in that line. But we will see the date once we get into the article. I was listening today, and yeah, so we're gonna get the date on that later on in the article. Pretty sure they talked about that. So those three main things is what was the real focus in the market, in my perspective of what I interpret from what the information that was provided. All right, so the Dow rallied 2.8% or 932 points, and the S&P rose 4%, and the Nasdaq rose 3%. Tech rallied, led by Apple, which was given a boost as treasuries yields dropped after Powell said the Fed was not actively considering a 75 basis point rate hike in coming months. So they're just going to do 50-50 and watch the market, as what I previously said in the start of the video of what I think. They're going to just slow watch the market and see, 50 is a nice level and it's okay. So it's just at this time, if things doesn't get better, they're just going to keep it at 50, and if things get worse, they have to raise it to 75. But right now it's at a 50. So just let's see if it's going to continue to be at a 50 while we continue to get economic data coming out month over month. So that's how the market is going to operate, and that's how it's going to be. So if you get a chance to buy the dip, please go ahead and do that. Go shopping and enjoy the rip. Okay, as you can see, everything rose up today, and let's see if the rally is going to continue to close the week and to continue next week and to close off this month pretty green. And let's see if we're going to get economic data that's going to back that up as well. Okay, so continuing the article. The sector had struggled for direction ahead of the Fed chief remarks after it delivered a widely expected 50 basis point rate hike and said it would get its balance sheet reduction program underway in June. Okay, so that's at a later date. That's the later date than what was expected. And the reason for that, Jay Powell commented and said it's not really a specific reason. It's just they just choose a date just want to choose a date. It's not really serious. They just chosen that date. So that's not really striking much fear or more aggressiveness in my perspective. In support of these goals, the committee decided to raise the target range for the federal funds rate to 3 to 4 to 1%, and anticipate that ongoing increase in the target range will be appropriate, the Fed said in a statement. And they continue in the article. They mentioned stocks that rise as well. So yeah, so let's hop into the into some interest rate stuff. I think let's here we go. Let's hop into this chart real quick, guys. Come on, I don't know why it's moving so slow, bro. I hope you guys are taking notes as well. And I hope you're buying on the dips and you're adding to the long term. Make sure you got your long term. This is what having the long term is for. Let's hop over to this chart real quick. Let's give it a second or two to load up. It's moving a bit weird today, bruv. Come on, bro. Come on, man. I don't know why the chart is taking so long to load. All right, there we go. It should be up now. Okay, boom. So the last time we hit these levels of interest rate was January 20. No, March 2020. The 3rd of March 2020, and they were cutting rates from these levels. That's what they were doing at this time. And rate was at 1.25. Interest rate was at 1.25, right? So at these times, right, they were cutting rates because they had a huge bump back in like 2018, 2019, that time frame. And it was gradually slowing over time until it hit a flat, died out. Okay, so now it is picking up at this time. So we don't want to see this, we don't want to see that. What we could really hope for is just a continuation and they drop on this level like that. We don't want to see this, we don't want to see that trend. We want to see a straight and then they drop back to these levels. Okay, we don't want to look like we're in 2017 again. We don't want to see those levels. You get what I mean? We want to continue on a straight level like this, but even if we are still high, we just continue to maintain a straight level until it just calm itself down, until it drops once everything resolve itself, basically. So that's what we should be looking for when these critical information and these critical data are coming out. So you need to pay attention to these types of things, and these types of things will help you in the market. Time in the market is better than trying to time the market. So now let's hop into some charts and let's get it cracking. So boom. Let's check out indexes and see how the indexes, how the charts are looking, because we already know that we did rise a significant amount today. Let's see if it's gonna continue and if it's reflecting on the charts. So last 4 hours on the S&P 500 is definitely looking bullish, and the S&P 500 is definitely looking to test 440 right now. So if I am a bull, I will definitely be looking to test these targets. If I'm a bull trader, day trader, swing trader, whatever you want to be, if I'm looking to trade the S&P right now, I would definitely be looking for buying opportunities to hit the 440 levels, because we definitely see that the J Powell helped the market out today. And if you can see as well, if you go lower into the 2-hour time frame, that's definitely giving you a bullish signal. And if we definitely break this level right here, if we break these levels and we continue to trade right above this, we should be looking pretty clear for 440. Let's go lower into the time frame and see how we are looking. Let's see, we're definitely testing these tops. Let's hit the 15. See, we're definitely looking bullish. 10-minute, we're holding nice at this level. And tomorrow, trust me guys, I think the market is gonna rip and it's gonna continue. Yep, I think it's gonna continue tomorrow. All right, look at these critical levels that I got for you. All right, let's get rid of this one. This is on the monthly, right? The monthly's finding a nice support at these levels, at the 400 level that we already spoke about yesterday, and we're looking good. So if we continue to trade right above 440, we should definitely look to test 450. If we're trading and holding above 400, I mean, we should definitely look to test 440 coming if everything cools out in the economy. So everything plays a huge part in what happens on the chart. All factors come into play. So just let's watch and see. All the indexes, you will see the same thing on all of them, like correlate basically pretty much. And we're going to look at bonds and see how bonds reacted today as well. See all any index I go on or high value stocks, you see it, all of them are looking the same. They're not talking about the unprofitable trash stocks. I'm talking about stocks like Apple and Nvidia, good stocks. Google's, your Teslas, your Disney's or whatever, good stocks like those, you know. All right, let's look at bonds. No, this is not it, bro. Why does it have to go in alphabetical order? Give me 1 second, people. All right, let's hit TOT and see what. Ooh, boy. I'm telling you, bonds are getting hit. Bonds are getting hit, bro. The bond market right now is looking pretty ugly. So if bonds continue to drop, I think stocks are going to continue to rise. So let's look out for that and see how that's operating, because they correlate like opposite. Like bonds go down, stock goes up. Stock go down, bonds goes up. That's pretty much how they correlate. So right now we're looking at 2016 levels on TOT right now. It is looking ugly on bonds. Like 6 years ago, TOT is trading for the same price that it was 6 years ago. It's crazy. All right, let's see what Tesla. Oh, Tesla reacted today. Tesla did good. Tesla was trading in the 900s. So Tesla was looking good. Yeah, Tesla is looking good. So the overall market right now, guys, is looking pretty good to me as well. Let's look at the dollar and see what happened. All right. I hope you guys are smashing the like button up while you guys are watching this, and I hope you're learning, and I hope you're staying in tune, and I hope you're confident in what you're doing. All right, the dollar today, the dollar got hit today. Yep. So you see, stock goes up, the dollar got hit today. The dollar got flush, bonds got flush, and tech stocks rose, indexes rose. Yep. So let's see if we're gonna get more correction in the dollar. Whoo, it was trading at resistance level for quite some time. Today, right? It was trading at the resistance, and then it got hit right after the Powell news today. So that's pretty much what happened today. And I think that's going to continue all the way back to 99 by the end of the week. Let's hope we see that by the end of the week. And that's definitely going to push the stock market back up. We should definitely be coming down to these levels on the dollar for a nice correction. And let's see if the dollar bulls are going to stay strong, and if they can hold the market up, hold it at a 100 instead of a dollar, instead of 99. Let's see if they're going to have the strength to hold the dollar at a 100. Or the bears, the dollar bears, are going to push it to 99. Let's see. Only time will tell. And Disney. Guys, you need to be adding Disney to the long term and buying it right now at these prices, because I'm going to show you the price of Disney is and where it is trading at right now. Okay. Let's hit. All right. The last time Disney came down to these levels, guys, look at this. TA does not lie. The last time Disney came to these levels, guys, was 2016, 6 years ago. 6 years ago was the closest time Disney came to these prices. 6 years ago, and in 2020, of course, it was trading at that level for like just a wick. It was just really a wick, pretty much. It dropped all the way to 78, then it got bought back up. So clearly, you see that the long-term investors, they just buy on the dip, buy the dip. Ever since the 80s, the 90s, 2000s. So that's all you need to continue to do with these value longevity stocks that you see everybody have and you see everybody with. That's in the hierarchy. They own all of these stocks, people. You gotta understand. They own these, bro. They owned them a long time ago, and they're gonna continue to own them. Their value, and they give you growth as well. So right now is a good time to get in. Anywhere below where it was trading at 200, I'd rather get it at 116 than to get it at 203. You get what I mean? And this is where my average is at. I think I got like a share and a half of Disney right now. Yeah. And it's holding up pretty good. So let's see what Netflix is going on with. Damn, Netflix. Holy shizzle. Holy shizzle, Netflix. This is a massive drop. And I'm telling you, a lot of long-term bull are buying Netflix right now. Netflix is trading at $204. And some time ago, Netflix was trading for 600, 500. Yo, that's a big ass drop. You call cryptocurrency pump and dump? What do you call this? This is rug pull to the fullest. This is rug pull to the fullest. So, people, let's look at Facebook real quick, then we'll just wrap it up. Facebook is okay. Facebook is alright. Facebook ain't too bad. Facebook, which was trading at 17 bucks in 2013, and it ran all the way up to 384, and it is at 223 bucks right now. Shit, that's a massive, massive run up. You tell me if you bought it at 17. You know what I mean? So, guys, I hope you enjoyed the video, and I hope you see what's going on in the market, guys. And definitely look tomorrow, guys. We're gonna drop another video again tomorrow. We're gonna see how all the analysts and how everyone continue to digest the information that we got today, and we're gonna see how the charts play out, and we're gonna see the moves that's gonna take place. Just give everyone to just digest this information that we received today from the Federal Reserve, from Jay Powell, and the statements they have provided, and the path that they are going to take into the future. So let's see how everyone take this across the table, and let's finish the week and see how we close the week out. Okay, so smash the video up, subscribe and share and comment down below, and I'll see you guys in the next recap video.